RQ also, but right here, you see this, this is very choppy. But the 15-minute looks like it could sell off. There's a Fibonacci zone, 50% of this big move waiting right down here in this area, right at the 200 moving average. It could boom, hit that area. I'm not opposed to shorting. I just don't want to do anything in this area right here, this choppy mess. So after yesterday's big explosion, we could have a correction today. Right here on the day chart, the MES, Trump's news about the tariffs. We got there are 50% zones down here. The momentum lines is kind of underneath it now. It's kind of pinched in between some moving averages at the upper third of the candle. So that's still bullish. Even if it comes down to the 50% zone, to the tips right here, I'm still bullish. Actually, I'm probably going to be bullish, but I'm willing to short it to that area. You know, we got to go whatever it's telling us. So exponentially speaking, if I use the 5,000 tick chart as my direction, I'm going to be using the 500 tick chart to get in on the trade. If I'm using the 2,000 tick chart as my higher direction, I'm going to use the 250 tick chart to get me into the trade. Exponential difference there, a factor of 10. 50-50 challenge. I got to make 50 before I lose 50 using 1 micro. The bell's about to open. It is. The bell just opened. So we're going to be looking to take some trades using 1 micro. The bell's about to turn that off. I'm going to hold tight. It's at the bottom of the range right now. If I really wanted to do something, I could probably try a range trade. But I'm going to wait. And range trade probably would have been nice. Down here, actually. Figuring out getting in over the top of that those pintails. And I wonder how much that would have been for a loss. $88. I can't do that on one trade. If I use that as my stop loss, if I use those as my those pintails as my stop loss, it's still a $60 trade. A little bit too rich for my 50-50 challenge. So that's another thing. We got to wait for appropriate setups here for what I'm risking, because I can't risk that much. $50. Now it's still selling off. Okay, let's take a look at the sell-off, because it could break this level. I'm going to mark this out because this whole area is a little choppy. Okay, we have that over here now as the support level. I can't short until it breaks that. We can try a bottom of the range trade though, if I get a good risk reward. I have to have a really good risk reward on it. So in this case, I'd be wanting it to sweep and show me some signs of reversal. I like a certain pattern I'm looking for. I'll just treat it just like I do the Fibonacci zone, where I'm wait for it to come into the golden zone and I look for a certain pattern set up, and that's what I take the trade. Yeah, I touched the top of that box. But it would have to close, and it did, above the 8 and the 20, consolidate, and then take off again, get another push on it. Get another push on it for me to, but like I said, I don't trust it down here. I'll be careful my first trade of the day here. Let's see what it's going to do here. Now there's an option to go long right here. It's really not requiring a range trade. Ignores the moving averages. It's strictly based on structure. So I don't have to wait for the moving averages to all be going up before I take a bullish move on a range trade. A little bit different requirements with the exponential charts. You're only using price structure, and you're only using patterns on the entry candles, entry chart. So there's an entry. This is looking pretty entry here. Starting to look like I want to try it, but I got to figure out my risk here. That's a $50 zone right there. If I take over the top, that's going to be too much risk. for one trade. Yeah, it's too big for me to take for one trade. Unless I get it lower. I'm not trusting it because it failed to break out right there. Could do a, right here, we got a chance to do a zone, a bottom of the range trade. Which one do I want? The breakout? Which is swinging too high. It's got, those pivots are, there you go. You could try it right now. Stop under there. Let's see if it pulls back a little bit. Let's see if I can get this one. It's too high. Come on down a little bit more. Okay, now can I try it?
Order filled.
Oof, is it going to keep falling? Oh, shoot. Don't come get me. Don't come all the way down. Bounce. Dang it. Dang it. Bounce up. Bounce up. Go on up. Go on up.
Filled.
Ah, it got me. Well, I was hoping this little area would consolidate. It would hold. I got in at a reasonable spot because it came back down. It just continued down, unfortunately. Let's see what happens here, because if it keeps making higher and higher lows, down 36 bucks, man. I can only take I got to take a very careful trade on the next one, or I'm going to be hitting my 50 on this one account. Now it's $50 per account. I got 8 accounts. If I wanted to trade 8 accounts, I usually only do 3. If I hit 50 on each account, I'm done for the day. But $50 loss on each Apex account is all I'm allowed to lose on this 100-day challenge. Make $50 before you lose $50. And that's just the way it's going to be, because I got to master risk management. The only way to get good is to master risk management. Master risk management. Okay. So that did not work. Not excited at all about taking any longs, because, I mean, just look at the 15-minute. These pintails are telling us a story here. So I said I wasn't excited about taking anything in this range, and I did, because I kind of got my mind set on a range play, but it ended up trying to take a breakout trade. So I got my strategies crisscrossed. So that's a lack of clarity, lack of focus on which strategy I'm supposed to be using. So a little bit mixed up there. So now that I recognize that, I really got to stop and think, what's my plan for my next trade? Well, I'm not going to take a long or a short until it breaks out of the top of this box or the bottom of this box. And if that's my goal, then I just need to wait. The only other ideas, what I already was talking about, was a range trade at the bottom, but I blew that because I tried some breakout thing instead in the middle of this box, and that was a huge mistake. Now it's breaking down. It's below the box. See if it continues with a trend line break.
Order filled.
Okay, I'll try that. If it comes up and gets me, it comes up and gets me, but I like it. Keep going. I'll give that a try. I mean, if it gets me, this is a decent trade. Now, if I lose on this one, I'm okay with it. I don't like losing on the other one, though. Do not like losing on the other one at all. Alarm going off. The lion growling pretty good there. I really need to get something on this, because I need to break even or something, because I hope it keeps going. Keep going down, please. Keep going down. Keep going down. Don't go. Oh, break even. Well, you're going to be glad that you did, because if you don't break even, yep, it would have stopped me out for a full loss. Now you know why I like to breaking even is the master plan, because I was almost going to take whatever I can get down here. It was like 20 bucks. But I'm really trying to hold for a 1-to-1. If I can get a 1-to-1, that's really, really what I want to do here. But here's the pattern to go back long. Up over the moving averages, consolidating, stepping up here. These little trend line breaks are good for the long side. Yeah. A nice pin tail on the 5-minute chart developing. Real good. But if it just simply makes a lower high here, and it's still not that bullish, I can't take a long until it breaks out, or the moving averages rotate. Everything's still under the 50, under the 200. There's no rotation to the upside. Sometimes I'll take this consolidation breakout, though. I love that pattern. But that would not have worked, would it? If I took that, stop under that candle. See if that would have. That's too big of a risk. Yep, $72. Right now it's moving in a way I can't take. It would have stopped me out. So it's not my favorite trade, but in a momentum market, that's a really good pattern. We're not having a momentum market. We're kind of choppy and sideways. Remember, the market conditions tell you what strategy to use. So if it continues to break down and hold down in the upper bottom of this big box, then I'm going to short the trend line breaks, which I tried to do here, but I broke even. That was not a loss. This would have been a decent breakdown. This was a good little breakdown. I didn't get in on time. Maybe I can do it now.
Order filled.
Let's try it. See if it'll keep going, keep going, keep going, keep going, keep going, keep going, keep going. Break even. There you go. Break even. Keep going, keep going, keep going down, keep going down, keep going down. Keep going down for me. There you go.
Order submitted. Order filled. Order canceled.
I'll just take whatever I can get. I'm down $10 instead of 36. Okay, that's good. We're back in business. I took this trend line break right here. That trend line break right there. Got in a little low actually. My stop was there. So not quite a 1-to-1 on it. Here's another trend line break. Now if these start failing, and then we might have only gotten the one that we could get. I like this. If it gets weak here, can rotate back down. That's a good try. Good try. Oh, it went too fast. I almost got it right there, man. I almost pushed the trigger. So it wants that Fibonacci zone, I think. Fibonacci on the higher time chart, 50% of the big move yesterday, 50%. It's not asking a lot. That's not giving up the whole day or anything. That's a reasonable correction. 50% is classic. But short it is. Higher time chart for me is 2,000. Lower time chart I'm trading on is the 250 tick charts. And you can see that sell off. Here's another trend line break. It's going, oh, I got to be faster, man. Both of those trend line breaks were good. Yeah, it's going down, man. It's going down.
Order filled.
I'm going to try it. Go ahead. Come on, get down there, please. Go ahead.
Order filled. Order canceled.
All right, we're green. We're green. All right, we made back to 36 and we're up $4. That would have stopped me out. I took what I could. Yep, it would have stopped me out. So out of all these trend line breaks, that one are working. Now we got one that doesn't work. That didn't work. Now it's above the 50, consolidating and pushing back up. Could we get a higher rotation into 50% pullback of one of these moves down? Or this could be a break right here. Right there, trend line break, boom. Take it. Stop right there. That's a $20 risk. $20 risk. Stopped out. It would have stopped me out. It would have stopped me out. Oh, I like to get it when it... I like to get... If this is another strategy I'm working on. If it stops out, turns red, I did not take the trade, enter in on that red candle. And you probably could break even on that. But yeah, you enter in on that red candle. Even though it didn't work, you can break even quick on that. So let's keep finding whatever trend line it might be breaking here. Keep an eye on that 50% pullback range. Fibonacci coming down to the golden zone down here. Possibly. But you see the behavior. Green, red, green, red, green, red, green, red, green. Every other candle. But it is chopping to the downside. So this is perfect for trend line breaks. Perfect for trend line breaks. If it keeps doing red, green, red, green, red, green, because the next candle will be red. Problem is, ooh, I don't like taking trend line breaks when the moving averages are up. I like it to trend line break to the downside. Like right here would be a good spot. Because it's underneath. See what I'm saying? If it's above 50, and if the 20 is above the 50, I'm not looking to short until you got more of a crossover of the moving averages. Because this is easy to, the bounces are easy to happen. $2,000 tick chart anyway is crossed over, so you really gotta well, it's gonna get, if it just gets back up into that box, I can't take a long into this power coming down, all this resistance. There's a trend line break, there's moving averages, and then if it just gets back into the range, you can't take a long up into that. It might work, obviously, but I cannot take a long into that. Now, if I get some kind of, I don't want to take a long into that necessarily, but it's a long ways to the top of that box. You could look at it on one hand that if you got the exponential agreement, the higher time chart and the lower time chart, and you get a trend line break on the lower time chart, you have to take the trade. If you're trading the exponential moving average trend line break strategy, it doesn't matter. You're always going to find a reason why not to take the trade. So that's another concept, another way I need to start thinking about that. Okay, if it stays under the 50 and 20, this is a decent time to think about shorting. If it went up and it's going sideways. What the heck? didn't hit the wrong one. All right. All right, what am I doing? I'm waiting. 2000 tick trendline break. Trendline break on the higher time chart. See what the 15-minute. Ugh. How could you take a long right there? Ugh. All right. At some point, though, if I get my 5,000 tick chart and my 2,000 tick chart all starting to trend in the other direction, we're not there yet. Sometimes I'll take a trade when we got the 5,000 tick chart crossing above the 8 and the 20 EMA. But not today. Not today for some reason. Not today. Not today. Everything, it's above all the moving averages on my 2,000 tick chart. So technically, I should be looking for trendline breaks to the upside if I'm trying to catch the faster trend directional changes. Longer term, slower down pace is telling me to wait. Telling me to wait till we get something above that 50 on the 5,000 tick chart. 5-minute chart, usually like it to be above the momentum lines. I'd love to get price above the 8 and the 20 on the 5-minute at least, but you're still got too much pressure to the downside. There it goes. It's trying to get up there. Now we're getting something. Now we're getting something. Golden zone bounce. Nope. Pierced right through it. Pierced right through it. Whoa, that little bounce right there didn't do nothing. Slam back down. In your face. In your face. Wow. So which chart timeline is dominating? The 15-minute. 15-minute is the one we need to respect. Sometimes you got to figure out which one you need to respect. You don't know. You don't know where the turn is taking, on what time dimension it's taking. And sometimes it switches. Sometimes it switches. Yeah, there's nothing I can do. I'm just glad I'm back up over a little bit green today. Barely. And there's no reason to force a trade. Those rookie days are over, man. Those days are over. Hunting for the good setup, applying the proper strategy for the proper market condition, knowing how to pick the strategy for the condition. Conditions change, strategy must change. All right, if I'm a one strategy, one setup person, then I have to have the one market condition that is perfect for that. And I like to trade multiple market conditions, so I have multiple strategies. All right, that's it for today. We were down 36, and we came back up. So break even's better than losing. Thank God for that. I'll see you on the next video. Peace.